All right, everyone, here we are with ticker symbol BB, Blackberry. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back. And as we go into all the information that this chart has to offer, I do want to announce to everyone to stay tuned till the end of this video because I have a new ticker symbol to share with you guys. We talked about INTC yesterday. I have a new one you won't want to miss. You definitely want to add this one to your radar and keep it on your watch list. We're going to talk about the chart and all the fundamentals about it moving forward. So stay tuned for that. So Blackberry has had a run, right? We've seen it running since $7 and even way back here since $6. Now, this was a little bit more calm here. It started to push up in the last 2 weeks. And again, this is probably on the list of the short squeeze. That's what the rumors are. Everyone's saying short squeeze, short squeeze, short squeeze, and that there's still more room here. Now, it has been running pretty wild. I mean, the highest point that it reached, which I really want every single investor to be aware of, is 2110. That is probably the most important point that this stock needs to break through. Look, that's the highest we've seen it in quite some time. Now, 2110 definitely needs to be broken through, turn into a support, so this can continue to work its way up to newer highs and new resistance levels. Now, it did a great recovery here, pretty quick one, after dipping down to these lows here of 1720 and working its way back up. Now, the 50-day moving average is 1846. I want every single investor to be aware of that. I can't land exactly on it, but 1846 is the 50-day moving average. As long as we're above it, we're in bullish territory. The moment we're below it, we're in bearish territory. Now, the first support level here, which tends to be this slight bearish candlestick before it continue to run in this upward momentum, is 1777. Now, 1777 is below the 50-day moving average, so we definitely want to watch this carefully because it could break through the 50-day moving average, and if it doesn't break through support, the bulls can reappear again and build momentum upwards, right? So it's going to be a little bit harder to tell here and pay close attention on how much leverage the bears have on this and how much leverage the bulls have to bring it back up. So we're in a tug-of-war zone here. Very important to keep in mind and be mindful of. So since 1777 is kind of further down and it's a pretty broad stretch, it's important to keep this one in mind and watch it. But I would dissect the chart up to this point here at 1881, a little bit before the 50-day moving average currently, to have an idea if the momentum is going downwards or if the bulls can stop it from hitting newer lows and getting closer to the 50-day moving average and bringing it back up before it hits 1881, right? So I would use that. That's completely optional, but I'm just suggesting it for any investor that wants to dissect the chart a little bit more and find it reasonable. Now, our resistance level is very important. The bulls need to break through resistance. We're currently sitting at 2007 and the resistance level is 2043. 2043 needs to be broken through, turn into a support so the bulls can continue to pull upwards to newer highs, new resistance levels, and get deeper into bullish territory. I want every single investor to be aware of this. 2043 needs to be broken through and pushed upwards towards newer highs, new resistance levels, and it's going to get them to the next step of the highest point of 1210, and that will definitely push them further away from the 50-day moving average in the upward direction. If they don't accomplish this, and excuse my terrible drawing, they can just hang out sideways even if they don't dip down, or even if they slightly go up and they're kind of hanging out and they don't continue to push upwards, the 50-day moving average at some point will end up above the price, and these prices are below it, giving leverage to the bears to pull this one down. I look forward to seeing your guys' thoughts on this one. Do you think there's more room here from this short squeeze, or do you think that some of that fire is coming to a dwindle down and this can actually slightly pull back? I look forward to seeing investor sentiment down below and other investors' perspective on this one. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watch this video. Stay tuned till the end because I have a new ticker symbol you won't want to miss, and you definitely want to add this to your watch list. So for everyone that has stayed to this point in the video, yesterday we talked about INTC Intel Corp And today I'm going to share another stock that you definitely want to keep on your watch list moving forward. It's in the same sector, but it's actually a little bit more comparable to Nvidia, and it's almost 1/4 of the price. Now, INTC, we talked about it yesterday. I just want to do a small recap. We circled the big circle, how much it's dropped. We did the small circle. This could be the bottom, but we're also seeing it slightly recover. And then we drew that we want to see if this consolidates or pulls down further, because it could pull down further. Right now, it's within the consolidation period and area. Very interesting enough. It's been holding itself up, and there's room here for INTC to work its way back up over time. There's definitely potential, especially in this sector. Now, the one I'm going to share with you guys is IBM. This is the one you want to add to your watch list, and this one's already recovering really fast. I did not think it was going to recover this fast. As I did yesterday's video, I was looking at INTC. I was like, possibility of a type of consolidation to form, and we're already seeing it. And IBM was consolidating pretty fast at these lows. And quickly, as the day started to run, you could just see it running. And as I'm speaking about it, it's working its way up to newer highs. Interesting enough, it's like fighting to keep pushing, and it keeps seeing newer highs every 30 minutes so far. Now, IBM, it's a little bit more pricier, but it hit lows here of 117, and the midway point of all of this is about right here at this point of 115. And then the next point would be probably down here at 111, and then 105. But to kind of break this down into three sections, 117, your first support. Your next one's 115, and then down here at 105. So you kind of have those points of reference to see if it continues to pull in that direction in the near future, or if it doesn't even get near them, this is already pulling back up, and it might seem to have been the bottom of this drop. I'm not saying that it can go any lower later in the future, but it seems like this has been the bottom, and if we see consolidation forming, right, for a really short period moving into tomorrow or the next following days, and then continue to work its way up, this could be on its way back up to these highs over an extended period of time, either weeks or months from now. Now, the one thing I do look here at the chart is that a lot of investors that have been in way before this started to run from 105 all the way to here, anywhere around this area, are saying, whoa, the last time we saw this at 117, 118 was back in November 20th, 23rd, leading into the end of the month. So we haven't seen this type of discount for 2 months now. So long-term investors are definitely jumping in and taking advantage of the price. That is becoming very obvious. And a lot of investors were willing to pay these premiums. So at some point, once it gets back up to these numbers, it's going to keep pushing up. So very interesting, in my opinion, based off the chart, how quickly it's reacting. This is definitely one to keep on your watch list and radar. As always, if you like this video and you found it helpful and informative, hit that subscribe button and don't forget to click on the bell. Share it with your friends and community. Don't forget to hit the like button to let me know you watched this video. And thank you guys so much for watching, and let's make some money.